Good afternoon, Rachel. How are you this wonderful Thursday?
Hey, Mr. Miller. I am good. How are you?
I am amazing. It's a balmy 89 degrees up here in the high desert of Ridgecrest. We have some visitors here today, but before we get into that, I'm going to read our handy dandy disclaimer because that's how we roll. Welcome to the Rachel and Mr. Miller podcast, where we cover real estate, real life, and occasional topics that may raise an eyebrow. We are licensed residential and commercial real estate professionals. However, this podcast is for entertainment and general information purposes only. Nothing you hear should be taken as legal, financial, tax, or other professional advice. And listening does not create a client or advisory relationship of any kind. These are our opinions, our experiences, and our conversations. Enjoy responsibly, like an adult beverage. And with that, I will click that button and I will hit this button and you'll hear, welcome everybody. We have our audience here. Yay!
We have a huge studio audience today.
Right, huge. It's gigantic. I don't know what we'd do without them. Rachel, if you would introduce our guest today, that would be perfect.
Love to. Today we have two very special guests from Main Street Mortgage. We have John Millette and Kimmery South.
Hi, everyone.
Hi. So I have connected through Kimmery through the Ventura County Business Women's Group, which is a great organization if you're interested in a good networking group out here in Ventura County. And Kimmery has invited John. Kim, why don't you tell us a little bit about where, who, why, and what, and also give us a nice introduction to John.
Okay, great. We are Main Street Mortgage located in Westlake Village, Ventura County, California. And John Millette is our broker owner of this white glove boutique service mortgage brokerage that we have here in beautiful Westlake Village. And I'm just very honored to have been invited to this podcast, and we look forward to, helping out as many people as we can and telling you a little bit about what we do and how we handle things and how we can, help people cross the finish line in getting prepared for mortgages.
Great. John, welcome.
Oh, welcome. Great to be with you today. This is great.
So today we're hoping to dive into the topic of mortgage coaching. John, we know that you have a published book called Your First Home Today. I'd like to learn more about that book and also help that launch us into the conversation of mortgage coaching.
Okay, well, that's great. Mortgage coaching is right down our alley. I do refer to myself as America's home ownership coach. And so the coaching aspect is a really big part of our business in that we have a lot of first-time home buyers and repeat buyers, and we do a lot of coaching. We do a lot of hand-holding. This is a really big purchase for people, and we want to make sure that we help them navigate through the process. It's really easy to get caught up in numbers and saying, well, it's a transaction, but it's not a transaction. Behind every transaction, there are real live people with real emotions, with real issues, and they've got moving trucks coming, and they have homes that they're moving into, which is very exciting. And it's our responsibility to make it a great experience. And, we get really used to the idea of all the stuff that we do, but we got to remember that the people that we're working with are our clients and what we call as our family members. They don't know a lot of things that we just take for granted. And
That's
so
very true.
Yeah. So we really focus on making sure that as much as possible, we explain the process, the timelines, everything that needs to be done, and just really help them through the process. That's why our clients don't even fill out their own paperwork. We do everything for our clients, and we just ask for their income documentation, and then we take care of the rest.
Wonderful.
John, do you do that when are you talking with your client on the phone saying, okay, let's walk this through, Mr. Anderson, John Anderson, 1212 Smith Street, and walk it through that way? Is that
Yep.
basically
Yep.
go through the apple? That's awesome.
Yeah. And then we walk them through as we go through the process. We let them know when their loan's approved, what we need for follow-up conditions. Right now, it's a big deal to be able to meet loan contingencies, making sure that the file is approvable by the date that the contingency is up. And if we can't meet it for some reason, then we do everything in our power to let you know a day or two before so we can get an extension on it and we can move forward and get the loan fully approved. We want to get the loan really in strong shape. And what we mean by loan contingency is that's the date that the deposit goes hard, right? So in other words, when you release loan contingencies, you're basically saying to the seller, yeah, we're good for the loan and we will close. this loan.
John, what do you find is this is not a loaded question, but it sure sounds like one. What do you think is the number one what's the number one mistake, I should say, that new homeowners make when getting a mortgage, other than not using you? Other than that one,
Yeah.
what's the
Well,
one
you know,
mistake that you think is the biggest mistake?
yeah, in my book, the first chapter, it really focuses on you got to have a strategy. And, a lot of first time home buyers go into the process and they go, okay, we want to buy a home. There's two things that happen. Number one, there's a survey that was done a few years ago that showed that 37% of people who rent can buy but don't know it. And so there's a huge cadre of individuals that can buy but they don't know it. That's the first thing is that they're reading newspapers and they're reading media that has all this false information. It's all negative only for the purposes of clickbait. People just want the clicks. And the facts is that a lot more people can qualify to buy than they even know they can buy. So another survey was done that showed that 45%, get this, 45% of the people interviewed thought they had to have 20% down to buy a home. And you can have 3% down. You can have 3.5% down. So the media plays a very large part in swaying individuals. And it also is for repeat buyers in some respects too, but especially first-time home buyers because it's their first time through. They're listening to all the media. They're trying to get all the advice that they can from anybody that they can. And the negative connotations out there are such that it discourages them. So that's the number one. Yeah.
I'm
And then
glad
number
you
two.
brought I'm glad you brought that up. What's in the news, the doomsday stuff that's in the news. I call her a client. She's not officially a client yet, but I helped her get into a rental 2 summers ago. And every now and again, I send her information and she responds, "Thanks so much, Rachel. Hopefully one day I can get into the market." And my response to her is, "I have great people I can connect you with to discover that you might actually be able to." So it's for a lot of people, it's taking that first step in the discovery part of things. And I think people kind of keep their information close to the vest because it's personal. Maybe there's parts of it they're embarrassed about. They don't want to
Right.
be judged.
Yeah.
So if I were to send this gal to you, what would be your first step with her to get into the discovery space of figuring out if she's ready now? And if not, what's the game plan?
Well, that is the number one priority. We find on almost every occasion when someone calls us, if you can get us to your client sooner than later, once I have a discussion with them, 9 times out of 10, they qualify and they didn't even know it. And
That's
so
wonderful.
and what it does is it really accelerates the process to where they know now that they can buy. And once they're armed with that information that they can buy, and this is the amount that they qualify for, because everybody qualifies for something. It may not be what they want, it may be less than what they want, but everybody generally can qualify for something. And it's true, it may not be the price points in the area that they want to live. So they either may have to move to another area or look in another area or get a cosigner or get someone to buy their home with. But the point is that once they get done with us, they know what they can do, what they can buy, what they can afford. And then at that point, they feel so much better and they go, okay, I'm ready to move forward. And if they're not ready to move forward, that's okay too. It's just that now they have a grounding where they're actually qualified and they can say, you know what, I've been through this a little bit. I can see that it's a much better, easier process than I thought it was. It's not so overwhelming. We can make it happen.
Can we peel it back just a little bit more when you say we discovered that they are qualified? What does that entail?
We've
Discovering
been
that they can qualify.
Yeah, that's a great question, Rachel. So what we do to discover that they qualify is when I speak with them the first time, I ask them what their gross income is, their earnings before taxes are taken out. I ask them what they think their credit score is. I get an idea of what kind of debts they have, car payments, credit cards, student loans, whatever it might be. And then I put together right on the phone, right there within 10 minutes, I give them a general idea based on what they gave me as to what they can afford to buy. And then I always follow that up and say, we have to have your income documentation. We have to be able to verify everything, but this is what it's looking like. And then I describe our process. We're a lender's concierge. Our clients don't even fill out their own paperwork. We'll do it for you. We just need you to send our income documentation. And I say the only cost you're going to have up front is a credit report. It's a couple $100 to get that. And there's no obligation. We'll give you everything that you need. We'll give you, and really what we work for, whether you're ready now or whether you're ready next year, is we want to get you into position to where we can give you an ironclad pre-approval letter. A pre-approval letter that is so strong that we have done all the checking. We've checked overtime. We've checked 1099 income versus W-2 income. We've checked self-employment. We've checked credit. We've done everything so that when we give that letter is gold.
Miller, did you have something you want to kick in?
Can I chime
Yes.
in for a second?
Yes,
So I
please.
just wanted to say this is where brokerages shine. A lot of people default and they go to their bank and they'll get turned down and they'll not even try again. So I encourage people to give brokerages a chance because we just have a lot more lenders we work with. Banks like to see people in a box. They have certain guidelines and people can get rejected easily, especially if they commission earners, small business owners. And brokerages, we just have so many products to choose from, so many different types of lenders. We can find loans for people who really thought they couldn't be qualified anywhere else. And that's why, it really gives people a chance to shop and to have choices.
Sure.
Yeah, that's a really good point, Kim Marie, because we have people that come to us. We had people come to one of our seminar one day and they went to a big bank. I won't say the name, but they went to a big bank and the bank said, yeah, we can qualify you for $400,000. And that was not enough. They came to us, they came to a seminar, and within 20 minutes of speaking with them, we had them pre-approved up to $650,000. Just
What
like
was the
that.
difference?
I don't know what the other bank did. I have no idea, but we took their income documentation, we took their pay stubs, and we said, you're really well qualified up to this amount of money. And they
So
were able
maybe
to
the
buy a
difference
home.
is you just have access to more products.
Well, I think it's more product, and I think that the professionalism, and not this is not throwing other people into the bus, but basically we're really good at what we do.
Sure.
And so we know what we can and cannot do. And it takes a lot of how should I say? It takes a lot of momentum for us to say no. We just don't
Okay.
say no. We do everything we can to turn over all the rocks, especially for first time homebuyers, because my experience has been that the reason why people are turned down at other lenders is that the lender does not spend adequate time in finding a way to get the deal done. Because sometimes the loan amount is small. Sometimes lenders or brokers will see it as not worth their time. And, we like to think that, hey, we will do what we need to do to get a deal done as much as possible and responsibly. We're not going to put somebody into a loan that they don't qualify for, but we're definitely going to get financing for them if there's any way to approve it to help them and make sure that they can make the payments. But we really fight for approvals for our clients.
And there's also the idea of, especially for a first time buyer, you're qualified for this much, but what can you actually handle monthly? Because
That's
what you
right.
qualify for and what you can actually handle monthly can be two very different things.
Yep.
What kind of
Yep.
conversation do you have around that?
Well, that's one of the first things we talk about. So what we do is we give them the principal, interest, taxes, and insurance payment, what's called the PITI, and we go over that with them. We say, okay, now remember that we can qualify you to this max amount. So when people want to get pre-approved with us, we pre-approve them to the maximum amount that they qualify. Then we ratchet that back down and say, okay, where do you want to be payment wise?
Sure.
And then we talk about the payment. And then when they get an idea of what that payment is, and they say, well, that correlates with this size loan amount. The
And we
other
also
thing that,
need,
yeah, go
I'm
ahead.
sorry, please go. No, please
Yeah.
continue.
The other thing that's really important, Rachel and Scott, is the idea that, we don't make this a big part of our education, but it's a part that needs to be talked about, and that is the tax deduction and the tax deductibility of mortgage interest, because it lowers a person's net payment. It does lower their payments because they do get tax benefit from having a mortgage.
Yes. Miller, how you doing over there?
I'm groovy. John, I have
Okay.
a couple of questions for you.
I knew he was racking them up over there.
I was like, okay, I need to stop now. John and Kimmery, how often do first time buyers come to y'all before they see a realtor?
I would say probably very little. Most of the time, we get our referrals from real estate professionals, and that's where we get most of our traction from.
I'm going to say that as a realtor, that drives me crazy is I get people that say, "Oh, I can afford this." I'm like, "Okay, who's your lender?" I haven't talked to one.
Right.
Yeah.
Okay,
Yeah.
how'd you come up with that number? Well, it's just what I figured out on Zillow or Realtor. Okay, so we don't have a real. Okay, good to know. In a perfect world, my opinion would be before that buyer goes and contacts Rachel or myself or any other agent for that matter, talk to a mortgage broker to get the who, what, when, why, where, and for how many cookies. Is it gives us it gives us, being myself and the buyer, a bigger footprint. And okay, like you just mentioned a few minutes ago, here's a rock solid deal that we don't have to worry about. It just makes our job easier.
Mhm.
So buyers out there, contact your mortgage lender, like Main Street Mortgage, so you can do that. Another
I
Right.
question.
actually, devil's advocate, I don't mind that somebody has come to me that's feeling like they're ready to buy, but they haven't connected with a lender yet, because that gives me an opportunity to connect them with somebody, and it helps me be part of the service and gain trust, especially if I'm sending that potential client to a lender that they really liked, and that lender was able to bring them to light that what they qualify for and get their pre-approval. There's a good chance that that person's going to come back to me. I have had an opportunity to create trust and a relationship, so I don't mind too much.
I just
I'm going
wanted
to
to
take you to
say,
task on that after Kim Reese says what she wants to say.
but just wanted to clarify there is a lot of confusion between what is a pre-qualification and a
Mhm.
pre-approval. And
Yes.
Right.
oftentimes, first-time home buyers especially might get something what's called a pre-qualification doing the Zillow or whatever. And that does not include any of their documentation. They don't need to submit any documentation for that. And that just doesn't really hold up in our industry anymore. It may open some doors to seeing homes, but when it comes to the point where they're serious to buy, they will have to go through the whole process of submitting their documents, and a deal can fall through really quickly. So you can't rely on that pre-qualification. What you really need to do is, if you're a serious buyer, is to get a pre-approval, and that includes submitting your documents and, getting your credit score checked and everything letter. That pre-approval letter will open doors for you, will open doors for you with the real estate agents, because they will be able to show you more homes and get you in. And then when you are serious to go and ready to buy, you're going to be passing up all the competition, all the people who don't have their pre-approvals yet. So I just wanted to clarify that.
And
Very
that's
true.
where that's where I was going to take you to task, Rachel, is because I can, and you can't get me from there. Is I will say early in my career, I would grab anybody. Hey, let's go look at houses. And both you and I get emotionally attached to our clients. One of the worst feelings on the planet for me is someone falls in love with a house. I love this house. This is the house I want to buy.
Yeah.
Oh, who'd you talk to your mortgage broker? Oh, I haven't. Uh-oh. And then they find out that the house is $100,000 over what they can afford, or not what they can afford, but what their payments are going to allow based on their credit history. That to me is just devastating. I will show houses, one or two, sorry, I'm getting blown up with text messages of one or two houses. However, I will put in there as a precursor, folks, it's really important that we talk to a broker so that you don't fall in love with the house and then find out it's not within reach. Like I said, I may show one or two, but it's more of exploratory, so I can get to know them a little bit better. It's in my world, it's really important. And our two worlds, when it comes to real estate, both Kimmery and John, I'm up here in Kern County, in the eastern part of Kern County in Ridgecrest. Our home prices up here are apples and bananas
We're
from
the
Ventura
bananas.
County in Los Angeles.
We're the
Our
bananas.
top of the mark up here is like 310, 350. Average is 260. And that's what our average home price is down here, up here, I should say. Oh, getting these pre-approvals are huge. I had one last week. They were all ready to rock and roll, and they were. And we ended up going 10,000 over asking. The house is in escrow, closes in a week. But if they hadn't had that, they had 7 other offers, and we were able to get.
And that's why it's really imperative that not only are they really pre-approved strongly, but as soon as that offer goes out, I offer, and I always am able to do this. I call the listing agent and I say, I want to let you know how well qualified, Mr. and these are the qualifications, and what do we need to do to put this file on the top of the stack? And
I've
so,
talked to a lot of lenders, and of them have said they do that.
They don't
We do
even
that
fill
on,
out the
yeah,
application.
we do that on almost every loan.
Very
Yeah.
nice.
That's important. I deal with a lot of brokers, and I can count on one hand the number of times I have received a call from the mortgage broker saying, "Hi, I am John from Main Street Mortgage," and that's an exaggeration. John did not call me, but he will soon. And they identified themselves, who the client was, and said, "I'm here if you need anything." This particular client I'm thinking about, they have a very unique situation, and I know we always say, "These guys have a unique situation." They really do. Long story short is the seller, both her mother and her husband are now on home hospice. And I was like, I had to make everybody aware of that and said, my seller has more stress on him than anybody should ever have. And we need to take the bull by the horns on this and get things done as quietly and as respectfully as humanly possible. With the mortgage lender calling me, I was able to make that call and say, "Hey, just so you know, oh, how do you?" I got to find my question here, John. I think you mentioned this a little while ago. When it comes to, I'm going to say, gig workers, people that are basically in a cash situation. I see you smiling there. Cash situation. Is it difficult to get those folks set up for a home when they have non-verifiable monies other than they put their $80 billion in the bank rather than under their mattress, which I
So
see a lot of
that's
too?
great question, Scott. There are so many different ways to qualify someone today. You do it the traditional way, the W-2s. That's standard. Everybody can do that. But we do bank statement programs under Dodd-Frank, the law that was put out, the new law after the subprime crisis put out. They want to know the ability to pay. They want to know, can the client pay their mortgage payment? And if they can't do it with W-2s, then a lot of times we'll do bank statement loans. You can do bank statement loans where you put in the bank statements, you do it for 12 months. That's their business, and you come up with their income, and a lot of times they qualify. Now, with the bank statement programs or the self-employment, you got to have a little bit more down payment, at least 10% down. It's best to have 15% down. There is so many programs available. We just got somebody qualified that had only been self-employed for 8 months, and we got an exception, and we got them approved. And usually it takes 1 year to 2 years to get that.
And this
So
is where, and banks, banks for non W-2 earners, brokerages really stand out because we can offer those types of products that banks won't offer. So absolutely.
Yes. So in the 4 minutes we have left, I have 3 things I want to see if we can cover really quick.
okay.
Kim Marie mentioned white glove boutique brokerage. I'd love to know what that means and what that means. And then also, how do you guide somebody who has damaged credit? And then lastly, before we sign off, John, I want to give you a chance to talk about your book before we.
Okay.
Can
All
I
right.
answer the first one real quick and John can
Yes.
take the
Please.
rest home? White Glove Boutique Service. Some of my realtor friends will tell me that lenders they've worked with will just send a link to the borrower, and then the borrower is calling the realtor asking for help on how to fill out the application. We do that for them, and also we're very proactive. And one thing I wanted to say that is very unique to our brokerage, and not a lot of brokerages have this, is that everyone here in the office is dual licensed real estate and as loan officers. And what that means
That's
is
great.
we have a very special insight into exactly how realtors operate, their special deadlines, their sensitivities, everything that they're, working with or struggling with. We have deep insight into exactly what they do. And so it really solidifies this incredible communication and this wonderful relationships that we have with our realtor partners. And we also understand all your suffering and all the work that you do. And so we have deep respect for realtors because we do have that special type of insight into and getting our license ourselves, even though we don't practice real estate ourselves.
It is unique.
Okay, so the damaged credit, we refer to that as impaired credit, and it really depends on what the needs are. I mean, we have credit specialists that we can refer out that people can help correct credit. But as a general rule, I have found that most credit works. I mean, if they come to us and they have a score below 580 or lower, then we might have to work on it. But a new it wasn't really legislation, but was new in the lending industry where basically lenders, they do not look at credit scores as carefully as they used to. They still look at them. It's still guidelines, but I've been getting approvals with people with scores at 550.
Oh,
So,
wow. But the
yeah,
interest
so
rate could be higher, right?
yeah, the interest rate is going to be higher. So you've got to be able to, you got to be able to optimize it. But generally speaking, people think that their credit is not good enough, and 620 is easily good enough to buy a home today. So
And
there's
that's
a
considered an average credit score.
no, the average credit scores are more like around 700. I mean, they're higher, no question about it.
Okay.
But you do not want to keep from buying a home just because your score is low. Unless it's prohibitive or unless the mortgage insurance is too high but generally speaking, you can go FHA financing and you won't have an issue with mortgage insurance as much. So we could talk more about that, but your listeners can give us a call and your viewers can call us. And you just don't want any preconceived notions to keep you from at least finding out what you can do.
Sure,
Well,
Miller.
I have a 15-second uh, fast hit questions, and I'll go into it saying there's an asterisk on here saying other conditions may apply. I have 5 questions that are actual yes, no questions. And again, I'm putting out there ahead of time. There's an asterisk saying other conditions can't apply. So I'll do it in 15 seconds and either one of you can answer. Okay. Do first time home buyers really need 20% down?
No.
Can gift money from family help buy a home?
Yes. 100% gift.
Is pre-qualified the same as pre-approved?
No. Got to be pre-approved.
Can student loan debt kill a home loan?
No, generally speaking, a study was done that showed that only 20% of all home loans keeps somebody from buying a home.
Awesome. And last one, should buyers avoid opening a new credit card during escrow?
Yes. Don't have new credit. Do not do new credit.
And
Don't go buy a
don't
car.
buy a
Don't go
bunch
buy a
of
yacht.
don't buy a
Uh,
bunch of furniture either for the new home.
Don't
yeah.
charge
So
anything.
yeah. In your last question about my book, I decided to buy that. I decided to write that book. This is before AI. I decided to write that book because people really needed some grounding and some structure. And I felt very compelled about the idea.
And had you written a book before? John, have you written a book before?
There you go. Okay. Can you hear me all right?
Yes. Have you written a book before, John?
Nope, that was my first book. I grew up in the projects. I grew up on welfare. And my mother died when I was 18 years old. My father walked out on our family when I was 8 years old. And we lived in the projects. I grew up on welfare and food stamps. And so this idea of grounding in a home is really a big deal to me.
John, where can people secure your book?
You can go online or you can just contact Kim Marie or myself directly. We'll send you a signed copy free of charge. Just
Oh,
for
that's
And-
nice.
your viewers, we'll do that for them.
And
Wonderful.
what is that noise? Oh, look, it's our people that I can't hear. Wait, where is it? It's not doing it. Oh, well, I'll turn it off.
We
now.
got people.
I thought it was. So I'll stop doing that. And Kim Marie, how do people reach you?
They can go to our website, www.mainstreetloans.com, or they can email us directly at Kim Marie or John at mainstreetloans.com. And I guess you can provide a link on this podcast when you launch it onto YouTube. And yeah, and if people contact us through this podcast, we'd love to hear that they saw us on this podcast, and so we know what the referral source is.
You just want to say, I talked to Miller. I know. That's what you want. That's
Yeah,
all you want.
absolutely. If they say Rachel or Miller, we'll know.
Right.
Kim is doing a great job. She's our business development rep right now, and she's working really hard. And so we appreciate her so much.
Thank you. Thank you.
Wonderful. John, how can people get a hold of you?
My cell phone is great, 805-432-2382. Just call me directly and we'll take care of you.
Wonderful. Miller?
Sorry, I am still trying to figure out why that's not working. Rachel, how do people get a hold of you? My turn. Ha!
Good Lord. Well, first, I want to thank John and Kim Marie, and I think our offices are very nearby. So next week, I'm going to get a hold of Kim Marie and pop in. I want to say hi. I want to talk to you more. People can get a hold of me. My cell phone is 815-813-664. You can also email me at rachel@gratishomes.com. My website is rachelmoreno.gratishomes.com. Mr. Miller, how are people going to reach you?
Carrier pigeon, or you can reach me at Homes with Scott K. Miller or Scott at homeswithscottkmiller.com, or sellingbridgecrest.com, or you can just give me a call or text at 760-264-3501, and that will also put you right in touch with us. I got that to work.
Thank you, gentlemen. Thank you, Mary. Hang on while we stop our
Thanks,
lives.
guys. Hang out for a second, and we're talking the green room. Thanks, guys, and we'll see everybody soon.